Hey everybody, welcome to the Ag Commodity Corner Plus podcast. It's week 20 Mo, and today is August the 8th, 2025. We missed you, Mo, last week. Hope you had a nice break. Good to have you back.
Missed you too. Yes, good to be back. Don't forget, guys, and gals, to subscribe to the channel. And I'm not getting a lot of comments from you guys. Come on, tell me what you think on the YouTube channel. So let's move on. Our title this week is "Will the USDA shock markets in next week's August crop report? And does too much rain make grain?" We'll get into a bunch of those headline stories. Let's start off with the weekly summary of quotes, and you can see that there was an unwinding of the spreads in both meal and oil, where I think meal just got oversold near term, and it's just bouncing, but there's going to be a ton of meal supplies over the next 12 months because of the new blending mandates for soil in the United States for 2026. Oil, again, corrected after hitting a new contract high at 57. I think, meal could maybe touch that 280, 290 top end and then start to resume the downtrend. It's just normal. Technically, that's what the funds do. Same thing in oil. I think we could touch 50. Some think by the end of the year, we could hit a low of maybe 45 or something like that, because these plants are going to try to slow down their runs just because it's not profitable today to keep going and expanding until 2026. Canola basically was weighed down because of that lower oil futures price. And then, of course, cattle and feeder cattle. I think Avinash talked about this last week, but new record highs. We did have a correction today, but the corrections have been bought by the funds, and that's typically a very strong bull market. So we'll see what happens on Monday. And then crude closed lower, breaking below that long-term channel support at 65. We've talked about this for many weeks. And keep an eye on natural gas. Natural gas broke $3. We said when it was at $5 late in the winter that, you don't chase this thing. You got to short it if you want to make money. And because when the summer approaches and you remove a lot of that heating demand and the price tends to fall. We were booking 2 years ago around $2 and currently at $3. So this thing could fall more, but as you approach the winters, it could find some support. So, Ash, why don't we start off with next week's USDA crop report?
Well, next week is the big one for this month, with USDA coming out with their latest estimates. So on the chart there, trade is expecting yield to come in significantly higher at 184.3 for 25-26 US corn versus last month at 181. Some of the trade estimates, we've been seeing it come significantly higher than that as well. On the soybean side, average trade estimate comes in at 53 bushels per acre versus last month at 52.5 more.
Yeah, so the USDA is expected to increase the corn yield. The QT News came out this morning, and said their yield is up to 186.3. I've seen 188s from StoneX, 188.1, I believe. And there's some throwing around a 190, and we saw that last year, but we never did end up getting a 190. So is it bearish? Not necessarily. I think the market's already priced a lot of this in, so it'll be interesting to see whether the USDA surprises. If they leave the corn yield alone at 181, that would be a surprise, to be honest with you. If they went to 188, that would also be a surprise, and that would be bearish.
On the global balance sheet, corn ending stocks for 25-26, average trade estimates sharply higher at 277.8 versus last month at 272. Soybeans 127.8 versus last month at 126 million metric tons. Wheat 261.2, almost close to last month at 261.52. The big one there, corn. I believe a lot of this is due to the U.S. numbers as well as some of the South American numbers as well.
Yeah, mostly probably U.S., but yes, the Brazilian a corn crop is 81% harvested. So yeah, and I'm not sure it's much bigger than 140, but there were some people talking 150.
And speaking about that South American crop, trade is estimating the corn, this is the 24-25 crop rather, to come in bigger at 133.7 versus their latest estimate of 132. Soybeans also slightly higher. Argentina crop estimates are expected to be almost unchanged.
I think the market's starting to talk about next year's Brazilian soybean crop, and it looks like it's going to be up another 8%. So big crops in South America.
We also get an update on the US 2025 wheat crop. Not a lot of change expected there. Most of the numbers coming in line with what we got last month, except for the other spring, which comes in at 0.49 versus USDA's estimate last month at 0.504.
Yeah, I don't think this is going to change the bearish sentiment in wheat futures.
From there, let's go into weather. And as far as the latest moisture update is concerned, the map for 2025 looks to be better than 2023, which was when we had big corn yield numbers, record corn yield numbers. Iowa supposedly this time around received more than 200% of normal precipitation in the month of July. The U.S. weather looking ahead is expected to be dry, but then it improves as we go into next week.
Yeah, the NVDI, this is an NVDI map, satellite map that shows the vegetation to date, and you can see it's even better than 23. In 23, Iowa had a record crop of 211 on the corn, so some are thinking that it could be even bigger than 2003. And we've had a very wet last 3 months, May to July, where again Iowa was extremely wet, and you can see from this chart. So this shows you till August 7th. One is the wettest out of 133 years. You can see how wet Iowa's been. But my concern is that there's a lot of behind the scenes issues. And so I think as we look into next week's report, whatever the USDA prints could be the highest of the season, because the market's already priced in 185 or better. But we're hearing, we talked about the tassel wrap. We talked about the pollination issues. We talked about the high nighttime temperatures. Now the Western Corn Belt's gotten too wet. Then we've talked about disease, Western rust, tar spot, SDS, white mold, and beans. So we're asking, is too much rain a good thing? Is it going to make grain? And I think with all these behind the scene issues, maybe we've taken the top end off the yields. We'll have to wait and see. I think, again, if you're going to know that, you won't know it till the final January crop report. And guys, don't forget to join our program. This past week, we provided some insight for farmers on what to do with 26 fertilizer inputs. They're very high, and your cost of production is going to be sticky. So you're going to need to manage that correctly so you can potentially make some money going into 26. And then this week, we also provided some basis insights and what to do there as well.
Last week, Mo, we spoke about that Derecho. So just to revisit that, the Derecho was classified as a 250-mile long one, which hit eastern Montana, North Dakota, and western Minnesota this past week.
Yeah, there was an initial Derecho through the Midwest earlier in the month. It wasn't classified as Derecho. It has to be at least 250 miles long. But this one was. And again, did it do enough damage to take the top end off? Again, it's one of those issues that keeps showing up in that U.S. corn and soybean crop.
Let's talk geopolitics, and that this is a weekly affair. We need to talk about Trump and the latest developments. So, U.S. President Trump has agreed to meet Russian counterpart Putin face to face, and this is supposed to happen in a matter of days. This would be the first encounter since the invasion of Ukraine. Media says that this is a diplomatic victory for Russia over Ukraine, as Ukraine's President Zelensky is not part of these talks. And on the same note, but tied to it, is the fact that Trump raised tariffs on India to 50% due to crude oil trade with Russia. And this is supposed to be brought into effect in 21 days more.
Yeah, Trump does not like India buying that Russian oil, and he's going to inflict some pain on them here short term. Even if, and I doubt whether this war comes to an end very quickly, but I have my doubts. But it's just like with China. When Trump meets with Xi, you got a deal. If Trump's meeting with Putin, he probably has a deal in his back pocket. I would not be surprised. And so is this bullish or bearish wheat? I think, or corn. I think it introduces more competition and production. I think if it's bullish, bearish fertilizer prices. I think it's bearish wheat and corn because of that increased production and competition, but it could be bearish fertilizer. So that's something to think about going forward.
Let's look at technicals and look at the corn long-term futures chart. So corn is trying to bounce after breaking below 380 as far as the September contract is concerned. Support is due to the near-term sort of shift in weather from what it was to hotter and drier, at least in the near-term forecast. It's not a perfect forecast, but also unlikely to sway any ideas of a record corn yield potential.
Yeah, and yesterday exports were really strong, so there is some value buying down here, and you can see on the chart the blue line. It's a slight uptrend over many years, going all the way back to 2020. I think it's 2019. So pre-COVID, I guess. So it's just a line. It doesn't mean that it has to hold. We could break below it. So, but you can see trading well below that 200-day moving average on a week, basically a long-term continuous chart. So who knows whether we've hit a low? We can't call it because it's only August 8th. I got to get past October 1 before we can be convinced of whether it's a low or not.
You touched upon it there, Mo. This week's latest USDA weekly exports report came in very strong for corn. New crop U.S. corn export sales were higher than the top end of trade expectations, making it the third highest all-time weekly pre-marketing year volume. The weekly U.S. export report was good, not just for corn, but for soybeans and wheat as well. So seems to be some value buying at these lower price levels, seems to be buying closer to $4 corn, $5 wheat, and possibly $10 soybeans.
It was impressive for corn because, corn, U.S. corn's not the cheapest in the world. Number one. Number two, I got a little bit of a theory I'm throwing out here, and I could be wrong, but Trump has signed 8 trade deals around the world. They're frameworks. They're one-pagers. He didn't provide any quotas, purchase agreements, no details. But what if these trade deals are creating more demand for corn, beans, or wheat? I mean, the beans were quite strong without China buying. It may lower the anxiety over the fact that China hasn't bought any new crop. Beans are the cheapest in the world, and China might postpone buying till that, September, October. So when are the funds really going to stop ignoring the strong fundamentals in corn, or for that matter, to a slight degree in the soybeans? It feels like other countries are coming to the rescue. I'm not saying that these other countries are going to make up for lack of Chinese buying beans, but it sure looks quite strong.
Let's take a look at the crude oil chart here. OPEC plus oil producers have used high summer demand to launch their first output increase in 3 years. And on paper, with the biggest global oil producing group increasing production, this should create more supply in the market, but it has not caused a crash in prices yet. Global demand has absorbed most of that, increase in supply outlook.
And OPEC at their next meeting is now contemplating whether they should reintroduce the 1.6 million voluntary cuts from other members. Look, we've talked about this for some time. That support comes in at 65. It's a long-term channel support. We're breaking below that. We're breaking below the 200-day moving average. As we get past the summer driving season in August, I would expect this chart to turn bearish into September. So I expect those lows to be retested down at the $55 level.
To end today's discussion, let's look at, like we always do, look at the latest CFTC numbers. So this one's as of July 29th. We'll get another update later today. The update shows that managed money funds were net short a little over 181,000 in corn, 36,000 net short in soybeans, and Chicago wheat a little over 65,000 last week was a bit of a sell-off in the grains. But canola, though, is at 96,000 net long with more buying happening last week.
Yeah, I would expect after this week's trade that the soy oil, probably they reduced that length. They bought back some soy meal contracts. They probably sold some canola. But again, I'm not sure we've given the funds any reason to do anything differently than they've done to date. Don't forget, guys, our tour, 2025 10th Annual Great Ontario Yield Tour, starts on Monday. So follow along, hashtag ON Yield 25 on Twitter. And again, provide your comments. Follow along every day. There'll be a ton of photos, videos, insights from experts, including myself. So, and then if you want to join us for wrap-up events on August 21st in Osgood, Ontario, as well as Woodstock on August 28th, you can watch our pre-video of the crop tour with myself and the chief agronomist, Henry Prinzham from Mazex Seeds. And I just wanted to end with this. The big money is not in the buying or selling, but in the waiting. For you guys who love to trade, this is more catered to stocks than commodities. Commodities are tough to trade, but you can. But with the advent of computers and algorithm trading, it's just become more difficult to make money on a day-to-day basis, per se. But what Charlie Munger is saying, he was the right-hand man of Warren Buffett. I don't know if you're a Warren Buffett fan. I am. It's an amazing track record, but I totally agree with playing the long game. So remember that. Most people don't sit around for 30, 40 years investing in Microsoft or Apple and all that, those great companies. But if you did, you'd be a very happy person. Until next week, have a great weekend. Take care. Bye for now.
Bye, guys.